Welcome back. My guest this segment is Steve Hawkins, CEO of Horizons ETFs Canada. Steve, welcome back.
James, thank you for having me.
Steve, the cannabis market has been a bit of a disappointment lately, I think we can all agree, and tax law selling notwithstanding, there's been some negative developments. A bunch of short strategists have come out with some pretty ugly reporting against Altria and Liberty Health Sciences. And at the same time, we saw Cronos do that deal with Altria, the $2.4 billion transaction that you would have thought would have resulted in more upside. So what is the cause of all of this negativity?
I mean, a lot of it is just the general market sentiment, what's going on right now. I mean, it's not just tax loss selling. The equity markets are extremely volatile right now, and we're seeing severe downticks. You know, when the S&P 500 on Thursday, Friday last week, notwithstanding marijuana stocks were generally up. Mm-hmm. You know, when the market is quiet and on a steady roll up, there's not a lot of news which is happening, there's not a lot of developments in the marijuana space, and we're seeing things tick down because of the high valuations that are already existing. But you know, it's general market movements are not good for marijuana stocks right now. Positive news like the Cronos Altria deal is very, very positive. Mm-hmm.
But yet the market, there was no uptake. Is that because all of this negativity has sort of put a paralyzing effect on investor sentiment?
I think that's one, especially at this time of the year as well. People are trying to understand what is going on with their money. It's interesting though, because last year was a complete reversal. We had very similar news which came out like at the end of November, started December last year, and we saw a huge wave of money rush into marijuana companies going through December and early January last year, whereas the regular stock market was going down the whole time. Mm-hmm. So, you know, it was a complete market reversal. I mean, the nice thing about the Altria Cronos deal is that's one shoe that's dropped. What's going to happen next? We have Philip Morris, we have Imperial. You know, these companies have to make moves into the space. They can't sit back and just wait for the marijuana companies to continue to eat their lunch. Sure. So, and that's just big tobacco. What is big pharma going to do? You know, we see the Shoppers Drug Mart deal, being able to sell online. I mean, these are all things which are going to be very, very positive for the marijuana market going forward.
So it sounds like you're long-term bullish, short-term bearish.
Right now, I'd say that's probably a pretty good sentiment. I'm actually in the points of, you know, I think that we're going to see some consolidation at this level from a price perspective, and we're going to probably stay in a little bit of a range until we get another nice piece of news which will break us out. So right now, I'm probably in the process of buying a little bit more in the cannabis space. Sure. But I'm still long-term bullish, absolutely.
Right. So what then? How does the Horizons ETF deal with this kind of negativity? How do you perform?
Well, over the past month, I mean, most of the marijuana companies were down pretty sizably. I mean, we had Altria down 60% in the past month, Aurora weed down 20% in the past month, but you see Cronos up 50%, and then you see Tilray down maybe 10%. You know, the Horizons Marijuana Life Sciences ETF was down 15% over the past month. On a relative basis, if you took 20% of each of those top 5 companies, Aurora, Altria, Cronos, Tilray, and Canopy, we slightly outperformed that basket of 5 stocks. But are people out there owning those 5 stocks? Generally not, right? They're taking bets on 1 or 2. Right. And if you bet on Altria, you got the crap beat out of you. Right. And there are not a lot of people that owned Cronos to the same degree, right? In Canada anyway. So, you know, weed and Aurora, you know, stood in reasonably nicely, but they were still down, you know, almost 20% over the past month. So for us, again, owning a diversified basket of cannabis companies, we believe is the most important way to get access to the space, simply because you don't want to be taking these individual bets. You don't want to have one company where you just lost 60% and you didn't own the company that was up 50%, right?
Right. Huh, so do you position yourself, are you positioning yourself right now more for exposure to the US market at all, or are you still focused mostly on Canada, or what combination of?
We're in HMMJ, we're primarily focused on the Canadian market only. We can't really invest in companies that have U.S. operations. So the MedMens and things like that are not in our primary portfolio. They're in our index, but we can't invest in them because we want to maintain our TSX listing. And these are the same rules that apply to Canopy, Aurora, Afria. Anybody who's listed on the Toronto Stock Exchange really has to follow the guidelines of the TSX, which means no US production, cultivation, distribution exposure in your portfolio. Right. But that said, you know, there's lots of new product ideas that are coming out there where we want to invest in U.S. companies. And you know, down the road, I mean, we've seen such a proliferation of the U.S. companies coming to Canada now. CSE, I don't know how many, I think there's 45 listings of U.S. companies in Canada right now on the CSE. And we see that as the primary driver of the capital markets for the U.S. companies and raising capital. They're coming to Canada. Yeah. They're listing here in Canada, and the CSE is doing a great job of becoming, you know, the cannabis exchange of the world kind of thing. So, you know, whereas the TMX has got their own rules, and we see a lot more opportunity potentially down the road for U.S. companies. So, you know, we're definitely, as an ETF provider, you know, we're looking to bring product to marketplace that people want, where there is potential for, you know, increased exposure down the road. We can't put U.S. exposure in our primary product. So do we want to create a second product or a third product that is going to provide only exposure to the U.S., where we see, on an overall valuations perspective, significant more ability for gains to be had on a relative basis. You know, we have these high valuations in Canada, and we have, for whatever reason, lower valuations out of the U.S. companies because they're not as well known here, right?
Right. There's been a few IPOs that have come to the market recently that were typically billion-dollar IPOs governed by super voting structures where a couple insiders control the whole thing for all intents and purposes, and the last few of them have really sort of discounted right off the hop from their IPO price. Do you think that's having a chilling effect on the cannabis space generally as well?
A little bit, for sure. I mean, you know, a lot of that again is because the U.S. market doesn't have access from a regulatory perspective to the Canadian equity marketplace the same way that Americans can buy U.S. companies listed on the U.S. exchanges, right? So Canadians can easily buy any Canadian stock, any U.S. stock. Americans can't necessarily buy Canadian companies the exact same way. So very, very different trading atmospheres for both all parts of the people that want access to the market, from the direct investors, the retail advisors, to the institutional investors. So that creates regulatory arbitrage from a cross-border perspective, and creates more difficult from a capital markets perspective. And so you see these nice IPOs come out in Canada, but again, there's just a general overall calmness to the market, or you know, coldness to the market, as you said. And so these IPOs are coming out, and there's always, typically when you see big companies like Facebook, you know, when an IPO, there's a retracement because there's a big controlling group of shareholders. There's a market value where it got priced at an IPO perspective, and you see a pullback. And then what happens after that? You see people consolidating, and you see people move money into the marketplace, and you see there's not lots of new prospects. But it's not like every IPO that's going to come out is going to be hot off the newsprint and going to shoot the lights out. You know, right. It's not Tilray anymore.
Right. So do you think in 2019 investors have to be cognizant of the fact that there's an increasing availability of product, but the quality level might be going down a little, so you need to be a little bit more focused on fundamentals?
Absolutely, that is the case. You know, before there was only 15 issuers that you could buy. Now there's 100 plus issuers that you can buy, right? So being diversified from an exposure perspective is very, very important. And you're going to have to do your homework if you want to get into this space.
You bet. All right, Steve, I appreciate your insight as usual. That was great. We'll come back to you in due course. Thanks for joining me today.
Thanks, Jeff, for having us.